Today I want to talk about market timing, not in terms of like trading the markets, but in terms of market timing in the business sense, in terms of are you timing the business trends around you well or not? And it's one of those things that we in this industry of FinPub and trader education, we understand this side of market timing in some ways better than others, and then other ways worse than everybody. On the one hand, there is like just an innate understanding of pretty much everybody in the space that if you sell a product into a trend in the market, like say when crypto was just going hyperbolic, like everybody was making money, whether the product was good, whether the promotion was good. It was almost impossible to write a bad or failing promotion during that boom, right? And you saw this when like cannabis was hot. Like when these trends take off, you know inherently that like the products and promotions within that trend are the easiest to sell. It's the easiest to go out and find new acquisition with. It's the easiest to sell on the back end. Like that timing the market from a publishing product perspective is something that we all get, right? But this is also true on a business level, right? Like we, as an industry, have grown. Remember, I go back to that first FMS that we did back in, I think, 2013, and that was the first presentation that I gave. Like that's how I opened my first presentation, was we're in a bull market in FinPub. And at that time, like the largest publishing groups were like, you might have had one pushing 100, I think, and then a lot of them were in like the 30 to 40 range. And then we had this explosion in growth of FinPub, right? Both in terms of the number of companies involved, the size of the companies involved, and then a whole lot of transformations that happened after that. And this idea of timing the business side of the trends is critical, and it's critical for a bunch of reasons. The first and foremost one, and this isn't just my idea, right? This is something that's been shown over and over again in pretty much every business context, right? Like you go to like the McKinseys of the world and the Bain consulting groups, or Bain and the Boston Consulting Group, you'll see that they have models for like corporate management where you look at you put all your business segments into a bunch of boxes, and which ones are in declining market segments, right? Like those are the ones that you cut. If it's in a growing market segment, that's where you invest, or one of the factors for whether you invest or not, I should say. And there's a guy named Bill Gross who founded a venture model called the Venture Builder, which is a whole other thing. But he went and looked at over 100 companies that they founded, companies that everybody else founded around him and his friend group and other VCs, and studied a few hundred companies. And he did this study, and he looked at 5 different factors, right? He's in terms of the success factors that mattered. And he was like, is it the team and the execution? Was it the amount of capital they raised? Was it just the basic idea just, really good or not? Was the market timing a big piece? And then what was the business or revenue model, right? And he went through and he looked at all of these different companies, and he's like, the number one factor, and this surprised him, the number one factor was the market timing of the business idea, right? Was that the right idea at that time in the market? And then came the team and the execution, and then came the business idea, the business model, and all that other stuff. But the timing of the market was the first and foremost thing. And if you go listen to, like Don Valentine, the founder of Sequoia, or you listen to like Peter Thiel, you listen to Y Combinator, you listen to all like the startup kind of VC world that are really trying to talk to founders and are really betting real money on the success of their companies. And you'll see over and over and over again these like top VCs talking about how the timing is so much more important than almost everything else. And yes, the team matters, but some VCs will even look at it and say, hey, I've seen really kind of mediocre teams have big exits in a well-timed idea, and I've seen crappy teams succeed well enough in a well-timed idea. And so you have this whole like world of like kind of copying other people's business models and all this other stuff. And so what's that got to do with anything today? And the biggest thing is we're in a period in time where there's different trends that are happening and not happening, both in the industry and outside the industry. And where you position your business inside those trends is going to be one of the biggest factors on whether or not you grow or not, right? So like, you can go back and look at, if you were a Forex business in pre-2008 and that kind of like, after the dot-com crash leaning into, or leading up to the '08 crash, you had explosive growth, right? That whole segment of the market was growing. Whether you were good or not, you were making money. We saw that in internet marketing, right? And like from 2001 to about the same time, you had like anything to do with traffic, it was easy to sell. Any new traffic method was easy to sell. So you see this across all these industries. And right now, our industry is experiencing large business trends, and you have to decide where to position yourself, right? Are you going to position yourself inside markets or sub-segments of the market that are in decline, or in segments that are in growth? And that was a big part of why I started getting obsessive over all of these other capital markets trends around us, is that I'm seeing the growth from a business standpoint, right? The segments of the market that are in growth are actually these segments that have to do with how does the audience and media side of digital intersect with capital markets, with public companies, with raising capital, Reg A, crowdfunding, all of that side of things, and what's the next kind of obvious step in that, and what's one after that, right? And that's why Digital Cap Raise Week for me was such an important thing to do, is these are areas where the customer segments are growing, on a B2B level and on a B2C level, but this is a side of the industry itself that is itself expanding, and so it's much easier to grow with an industry than to be stuck somewhere where things are shrinking. And now FinPub is not shrinking, not by any means, but what is starting to happen is profits are getting competed away. And that's a different issue, right? Because the second issue with, as the market expands and it matures, now everybody's coming in to compete and cut up the profits, right? And you see this really clearly in traffic channels, right? You'll have, or in with conversion models. So if somebody comes up with a channel in a new marketing funnel that works really well, it's got these crazy increases for a while, and then everybody sees this working and they start copying it. And as they copy it, they degrade the performance of the original guy's offer and strategy, because now it's knocked out over and over again. Everybody starts doing it and they start to get competed away, right? The profit in that gets competed away. Just like if you find a new distribution source, a new ad network, in the beginning, it can be amazing. And then as it gets established and other people find out about it, the opportunity that it represents gets competed down. And the more entrants you have in a marketplace, the more that happens. And so right now we're seeing that start to happen all over, right? We're seeing an increase in competition. And that doesn't mean that this is a bad time to be in the business, not at all. I mean, the industry itself is going to continue to grow. I think there's still, like, we've been in a bull market for, a decade in terms of customer growth. And I think that bull market is going to continue because, again, it's a structural shift in how the population engages with investment decisions, and then that issue of the millennials actually just turning 40, and last year and going into now just starting to approach their prime investing and savings years. Like, there's a lot of legs in this industry for more and more growth. But while that happens, as that happens, we're already seeing this, a lot more alternate models coming in and trying to find traction, whether it's a subscription basis or not a subscription basis. We're seeing an increase in the amount of spend that's going into digital from ancillary industries like wealth management and other places where the robo advisor industry has exploded and continues to explode. And we're seeing new entrants in the fintech side, all kinds of spaces where they're coming in and they're competing away profits in media and channels for us, right? And so that's that kind of balance that we're in right now, is that as the industry continues to grow, profits are getting competed away in different ways, and so you need more and more kind of innovative approaches. That's why, like, one of the consistent strategies for any direct response marketer has always been try and find the newest traffic source, newest conversion strategy, because as we all know, there's only a short window. I remember when the first VSL came out, the increase on conversions was something like 9 times, about 900% increase in conversion rates when they had the first video out, but that disappeared within like less than a year. And then it went down to where it wasn't necessarily adding any additional power. And so, like, it just, one, the customer got used to it, but two, everybody started using it. So whenever something works, right, it's kind of a race to see who's going to, capture the most money out of it before it degrades. And that happens on an industry level too. And so the easiest frame for thinking about like, what are the chances that your business is going to grow is to look at the customer segment that you're in, and is it growing or not, right? And how much is it growing? How fast is it growing? Starting a blockchain business or NFT business immediately after, it tanks 80 or 90% could be a really good idea. It's not going to be a good idea during that short period, but it could be a really good idea if that market continues to grow, because you can position yourself really well in those kind of downturns. But putting yourself, if you're right now just thinking, hey, I'm going to start a cannabis franchise after like we've already seen kind of the growth of that market and kind of like not the petering out, but just like the fact that it's stabilized and it's not growing excessively anymore, and it's shrinking in terms of the investment interest. That's a terrible time to start that business, right? And so that principle for product is true on your business level as well. And this is true if you're a copywriter or you're a media buyer too. Like, where is the segment that you're focusing on? Is it growing or not? We've seen the growth of a lot of media companies growing faster than a lot of publishers in the last several years, largely because we've seen this increase in media spend. And so media has been, like selling media has been one of the places to be, right, over the last several years, because it's very easy to grow during a period of time when media spend is increasing everywhere. But that's going to hit a tipping point too, where it's going to grow and it fluctuates, but then you're going to have increased competition. And so I think that when you think about your business in your career, thinking about where you are in that cycle of like the growth or death of a customer segment is kind of critical. And so and it has a lot of knock-on effects, right? Because one, again, if this area is booming, easy to get a job, easy to find clients, easy to find customers. As it shrinks, all those things start to slow down and even invert, make it harder and harder, because now there's more experienced people who are all competing for the same piece of the pie. But then if you recognize that direct response businesses in general and publishing business in particular also have this kind of cycle where they grow in value and then they can lose value as that segment shrinks, or gets competed away, then you also realize that no matter how good of an operator you are, you have a limited period of time where you're able to capture the value of the business, right? And I make this distinction between capturing the profits of the business and capturing the value of the business. The capturing the profits of the business is you're going to take the money out and as income, that's your cash. Whatever happens to the business long term, like you got your cash out, maybe it falters, maybe you sell pieces of it once it kind of shrinks up, maybe you pivot and do something completely different. Capturing the value of the business is you're going to build the business as a product, and besides collecting some of the revenue, you're also going to try and get a big exit on that business. You're going to take it public. You're going to try and have some kind of liquidity event where the wealth that is the business itself can get transferred to you and from somebody else, right? So if you're going to capture the value of the business, then you have a clock ticking on your market segment. And if you're not aware of whether or not your market segment is growing or not, that's a problem, because you have no idea what your timelines are. And so those are the kind of things that I think about a lot. And it's one of the reasons with Digital Cap Raise that I'm so focused on it, is I know this is a growing part of the industry. It's a growing part of the industry for me personally, but it's a growing part of the industry for everybody who sells media. It's a growing part of the industry for people who have publishing audiences. It's a growing part of the industry for people who write copy, right, or generate leads. Any aspect in content creation, like every single aspect of the business, this is a growing area. Is this intersection with all the different parts of the financial world. And so that's why we want to be in that segment collectively, because it is growing so much. And that's just to say, like, this issue of growth of the market is just something that you have to keep in the back of your head. And it's easy to get focused too much on like the day-to-day, that you don't look at these things. But I wanted to put that in your head, that the size of your market changes over time. And when it's a positive change, it's positive for your business. And when it's a negative change, then everything gets harder. Everything feels more difficult. There's more work for less money. And then if you're trying to build for an exit of some kind, you have to have that timeline in mind, because you could peak out and then you're about to sell and then the bottom drops out of the market, and, on the customer side, and you're kind of screwed, frankly. So those are the types of things that we talk about, and I'm talking about more and more here, but also in our accelerator. Digital Cap Raise Week is one of those things that we're going to really dive in on, where I think some of the bigger segments are that are growing, where there's a lot of opportunity, because there's a ton of segments here, there's a ton of aspects of this to look at. I hope you guys are planning on coming to Digital Cap Raise Week up in New York. It's going to be a great time, and we're really going to explore all these different directions of the business. So hope to see you there.